So I'm gonna try to run through this one just because I took 4 trades and I don't want this video to take too long. So here on IWM, I attempt to short IWM at this channel. To me, this is a larger bear flag on a larger time frame, and we're approaching the bottom of the channel. I got a little aggressive here. I didn't wait for the break of the channel like I usually should, but I felt that it was close to my mental stop loss area, which would have been this gray zone, the previous day low. Initially, it looked like the trade was going to go and break below that channel. But as we can see, it pulls back up and starts to head towards that zone with a little bit of strength. I wind up cutting this trade for a loss only because I felt that IWM was also kind of trading alongside QQQ with QQQ and the strong push to the upside. I went ahead and cut my losses, and for good reason too. Like we can see here that IWM is definitely pushing up, very strong, like alongside QQQ. So that was the first trade that I took for a loss. So the second trade I took was on IWM. I just couldn't leave it alone because it was in this bear flagging pattern, and I had a feeling that it was eventually going to break and go in the direction I wanted it to go in. So I still have the put contracts pulled up, and I'm waiting for this counter to close or get close to closing before I enter the trade, which is what I should have done the first time. I would have not have lost on that first trade. We can see here I'm bouncing back and forth between contracts, trying to figure out which contracts I want to choose. So I just go ahead and choose at the money contracts and go short because of that counter closure outside of that channel. So as I'm watching the chart, QQQ starts to make a pretty strong aggressive push to the upside, and as well IWM does the same thing. So I go ahead and cut my loss on that one as well. My thinking on cutting the loss was I could always enter a trade again. If it started to look like it was going to go back down, I can easily enter. Just manage my risk accordingly, and then I could always enter a trade another day or at another time rather. So any smart person would have probably ended the day there. I just couldn't leave IWM alone. It hasn't broken the previous day low, you know, hasn't closed above the previous day low. So I just felt like there was still a bit of weakness. So what I have here is we have this push to the downside, kind of the same thing, another bear flagging pattern where we have this move to the upside. So I'm still keeping an eye on this. I'm still thinking that IWM is going to show itself move down further. So I think on this move right here, I get a little aggressive. I don't wait for the candle closure. I go ahead and enter this one. Same thing. I feel confident that this is going to give up the downside. So I go ahead and enter 5 contracts short. My idea behind entering, getting aggressive with that move right there before the candle actually closed was that I was that much closer to the stop loss in the event that the trade decided to go against me. So we can see here that IWM did make the move that I was looking for, that I was hoping for, and then what I have there drawn is a price level, which is a low of day. And I was hoping that it would hit that, and that being my take profit target. But what I see here too, though, at the same time, is we have some candles on this move to the downside with long bottom wicks. This candle I didn't like this one too much just because of the amount of volume coming in. That told me that we were definitely finding a bottom or getting near a bottom. So at this point, I was looking at Qs also to see if there would be any strength that would step in, and that would be my indication to go ahead and get out of the trade. So you see me get out of the trade right there just with that strong candle push to the upside. So that being the third trade I took for the day, that one actually brought me back from the red, put me in the green just a little bit. So as I'm watching the charts, I noticed that on QQQ, we also have another bear flag setup forming. We have this move to the downside with this upward channeling price action, if you will. So I have that zone drawn up. And then what I have over here on the left side is a QQQ call contract pulled up. So what I'm noticing is a surge in volume telling me there's a bunch of participation in this area. So I'm also looking at this, and it's also trending much like it would the much like the chart is, where we have this downward move with a bit of an upward channel. Also telling me a bear flag, there's a bear flag forming. So with the call contract, if we were to break below that area, call contracts are going to lose value. So that tells me the put contracts are going to gain value. So it looks really good for a setup. So you saw me enter there 5 contracts short on QQQ. Very confident in that move to the downside. So I go ahead and get out of my trade there. With the increase in implied volatility, the VIX being up a little bit higher than what it usually is, contracts were a little bit more expensive. I'm not used to trading that much, so I wasn't very comfortable in letting it run or try to let it run any further. So I went ahead and got out of the trade there for a pretty good profit. That one put me up even further in the green for the day. So that was the fourth and final trade for the day. Overall, I'm pretty happy with that. The fact that I was able to come back from the red, even though initially I guess I wasn't patient. I think that was one of the takeaways for the day was I wasn't really patient on those first two trades, waiting for it to actually develop or break the channel. The second trade did break the channel. It just didn't go in my direction. So only to regroup, wait for another setup. An ideal looking setup came up, took advantage of that one, and that one went in my favor. So then the fourth trade being the Qs, that was also a pretty good looking setup, took advantage of that one, and came out green for the day.